All right, what's up, everyone? My name is Ryan, and I am the founder and CEO here at Sell That Option. Thank you for taking a look at one of our daily recap videos. So, as you all know, or are going to find out, I send a daily recap video every single day whenever we make a trade here at Sell That Option to our members. The reason that I do this is I believe that getting into the mindset of somebody that can successfully trade is so incredibly important. Right? We know that when you can get inside of someone's head that figured it out, you can truly get into a state where you begin to think similarly or understand something similarly. And so that's what I try to do, right? I try to, every single day, help members understand why I made the trades I do. So if you ever do decide to become a member here at Sell That Option, what you'll do is you'll come in here, you'll go to the members, and you will get into the daily recap videos. Now, these daily recap videos, the most recent one is right here, right? And so you just go in, you sign into your portal here at sellthatoption.com, and then you just click play, and then you can see exactly the trade that I made and why I made that trade, and any particular things that were important for us as we go through thinking about our trading. So without further ado, take a look at the daily recap video that you have selected. If you ever have any questions at all, please feel free to reach out to me at Ryan, R-Y-A-N, at sellthatoption.com. And as always, stay humble, stay hungry, and here's to our success.
All right, what a day. So today is Tuesday, November the 13th, 2018. Let's go through our two primary trades. The first one down there, you'll see a straddle with EWW. That was a fat finger trade. There were times in which during the day that would have, been fine. But the one that I alerted on was the trade that I had initially intended to do, which was a very tight synthetic straddle there on EWW. And so at the time, you'll see I put the straddle in between the two strikes, or the strangle in between the two strikes. At that point, EWW was trading for approximately 40.60, so I went with really a synthetic straddle, right, for 386 in credits. You'll notice here that I have a number of trades already taken off, or looking to take off with EWW because I've been ladder, and we've seen a pretty significant move there in the Mexican ETF. And so our break evens are going to be plus minus 41 and 386. So 41 plus 386 on the call side, and 40 minus 386 on the put side are going to be our break evens, and we're looking to take this off at approximately 289 or 290 ish. Then the other one we did was one that I always tell folks is incredibly risky, right? And that's UVXY. I sold one, right? So one UVXY call for the December 28th expiration for $2.42 of credit. Now, right now, UVXY is currently trading for approximately 55. When I did the trade, it was trading for 57, but after hours it looks like it's moved down a little bit, which is always great for the position. Now, I got 242 in credit on that particular trade, and so what you're going to notice here is I sold it so far out of the money, so UVXY would essentially have to double here, and it's already been up over the last couple of weeks. Now, the market's shaky, right? We're going to take a look at the market. The market is shaky, and so is it possible that this could happen? Absolutely. Absolutely, it is shaky. Let's go to UVXY. You'll see here, this is the position. I traded as far out of the money. Nope, that is December 21st. Here is December 28th. And so I traded it so far out of the money, right here. So that is exactly where I traded that, and that's exactly why I traded it there. Now, let's go to some charts of note. Okay, right, USO, oil got pounded today. Major pounding in oil, and really all of the oil derivatives. So you're looking at OIH, XOP, XLE, XLRE, right? All of these securities that are related to oil are also in the process of getting just destroyed. So, we're going to continue to look to sell premium here. we can't really shy away. I still think that oil has the chance to make a comeback here. And I've got positions up here at 15, right? Which would have been profitable. It would have been profitable right here. So and then I've got some at 14. I've got some at 13. And you get about $1.25 in credit. And so I'm down on a number of those positions. But again, we're going to look for the cyclicality of the market. Now, other securities of note, yeah, you see OIH, which we alerted yesterday at the 20 strike. OIH, took a little bit of a beating. I've got a position in. And so we've seen two massive upticks in here. We have EWW. Again, we've seen that move quite a bit. However, we're going to keep doing what we need to do here, and we're going to continue to sell premium. We're going to continue to be neutral over the market. We're going to continue to really just try to see. And here's another one, right? We got XLE, who's seen a pretty significant 78 to 65. And we're just going to continue to try to be neutral. I can't pick direction. And I don't necessarily try to pick direction. What I do try to do is I try to take in credit based on implied volatility percentiles. I tweet out the implied volatility percentiles every single day. And today, at the end of the day, there were 4 securities, right, that had IV percentile of 100%, one of which was EWW. We have USO. And so we got to take advantage of those times in which we see massive moves and massive IV because over time, right, and this is a long-term game, market's going to be cyclical. And we've got to play that. We've got to play the cyclicality of the market, and we just have to know that over time we're going to win. And then let's take a look here. What I'll do is I'll just put in VIX. So VIX, you can see here over the last little bit, 26 to 42. So we've already seen a pretty significant uptick in VIX, which is another reason why I'm confident in trading UVXY from 35 all the way up to 70. And so we've already seen a double here. And if we continue to sell far out of the money calls and small, right? And small. This is a dangerous trade. But if you do it right and your account can handle it, and my account can take assignments. I am not afraid of getting assigned and letting the historical reality of what the 3-year weekly, right? This is UVXY, right? The 3-year weekly here in UVXY tells us that we are going to continue to just lose value. And so that's why I'm not afraid of assignment. I can take 100 shares, getting assigned 100 shares at double the price right now, and I know over time I'm going to win that, and I've got the account that can handle it. And so when you're looking at trading some of these volatility positions, you're going to want to know, can my account handle it? And if it can, rock on, right? If it can, rock on. And if it can't, you're going to want to not take those trades because in UVXY, if you don't have the account that can handle it, right? If you don't have the account that can handle UVXY or VIX short volatility, you can lose and owe a ton of money, right, to your brokerage. And none of us want to see that, none of us want to see that. And this is long-term trading, right? This is long-term trading, kind of the perspective that I take when it comes to volatility. This is a fun time to be trading, right? This is where you just have to stick to trading the best securities, the best ETFs. I've got a blog post on my website that talks about trading ETFs and why I only trade ETFs. You'll also notice, though, that I rarely ever trade U.S. securities or U.S. major market. I don't trade the diamonds. I don't trade the spiders. I don't really trade small caps, the IMW or the Qs. I'm staying in things that are a little bit less volatile, but taking advantage when that IV percentile really pops. And that's what you want to look for, right? You want to look, and there's another blog post, right? I'm going to talk about this often. There's another blog post on my site where you want to, I tell you exactly what I trade. And you need to go into your Analyze tab or your Market Watch tab and create those and add IV percentile as something that you're going to look at every single time, right? All right, so we are almost 8.5 minutes into this daily recap. Really, the daily recap itself was pretty easy. 2 trades, one in EWW, which is right here, and I need to go clean some of that up. And then you have a trade in UVXY, right? So really a pretty easy daily recap. But I did want to talk a little bit about the reason, right, that I got in UVXY, and to talk about some of the things that you don't want to do when you're trading UVXY or volatility in general, and how careful you have to be. And I wanted to talk a little bit about oil, because I always have some level of exposure to oil, whether it's through USO or a derivative, or one of the collections. And yeah, so there's a lot going on in the markets right now, but we just want to be cyclical. We want to be cyclical. We want to, as much as we can, be risk defined, because that's going to protect that capital. All right, that is it for me for today. If you have any questions, please feel free to reach out to me at Ryan at Sell That Option. Otherwise, as always, stay humble, stay hungry, and here's to our success.